know what's up with their money. Let's bring in our market panel. Dennis Gartman, editor-publisher of the Gartman Letter. Jim LeCamp, RBC Wealth Management. CNBC contributor Jerry Bowyer. I want to start out with Jerry Bowyer. Jerry,
yes,
have we had a sea change? Look, lots of terribly bad, discouraging news. Mr. Obama starts out with a budget that's clearly way left of center, tax hikes on investors and so forth and so on. And all of a sudden, we get some good news on bank profits, and the whole story is turned around. First, do you buy it?
Yeah, I think there's been a sea change in a number of areas. You've already talked about the yield curve. I mean, the yield curve is basically a proxy for the operating margins of the lending division of a bank. That's their profit margin. Basically, the yield curve equals the profit margin of their lending operations. So I think everyone's getting that this isn't a bank-wide problem. This is a troubled asset problem. And by the way, finally, after months and months, you've been pounding this issue, Steve Forbes and others, finally Washington is catching up to the fact that mark-to-market accounting has to be dealt with. Now, they're in the phase now where they're not going to repeal it, but I am convinced, Larry, they're going to modify it in some way. They'll put it on a moving average basis, or they'll amortize it, or they won't count it as part of capital requirements, or they're going to give some kind of safe harbor coming from FASB. So I think mark-to-market is going to be fixed. Just one more thing real quick. I agree with you. I think there's a link between Madoff and the rally. This is keeping capitalism clean. This is if you cheat, if you lie, if you cheat, if you steal, you go to jail. So instead of, often these scandals are used to attack capitalism, instead we're purging the cheats from capitalism to keep capitalism clean.
That is such a great point, and it enforces the rule of law, despite that the left believes capitalism is essentially corrupt. If you go back before the last bull market, look, the market was up from late 2002 until late 2007. Remember what happened? Bernie Ebbers busted. John Riga, the Adelphia cable guy, busted. Dennis Kozlowski, Tyco, busted. Jeff Skilling, Enron, busted. That was a big thing. And actually, I want to go to that. Jim LeCamp, are you impressed with this market rally? Is there a sea change? And as Jerry said, an upward positive yield curve, easier money, and in fact, the rule of law rules in capitalism.
I'll tell you what I told you last July 15th, Larry. The volume was good enough on Tuesday to where I look at it as a shot across the bow. You pay attention to it. But remember, we had a 6-day rally in November. We had a 4-day rally in December. We had a 3-day rally in January. And none of those really had any follow-through. Secondly, the volume declined yesterday, and it declined again today. So I'm paying attention to this. I think it's possible we could have a very powerful bear market rally here, but I'm really skeptical that we're in a situation where we're turning around the economy here. Credit spreads are still way too tight. Jumbo mortgage rates are still way too high. Delinquencies are accelerating. Consumer, credit cards, and commercial loans are all accelerating. The market rallying now would suggest this is all going to be turned around in 6 months, and I don't buy that. So I think what we are is in a position where we are deeply oversold, and now we have a bear market rally, and we'll see from there. So I'm paying attention to this. I think it's a possible change, but I'm not ready to call an absolute sea change here.
Dennis Gartman, the first question I want to ask you is, do you agree with Jim LeCamp it's a bear market rally, or might this be, you know, a more durable shift to a bull market?
Larry, I think this might be a more durable shift to a bull market. Mr. Bowyer had a very important point. Nothing is more powerful in capitalism than a positively sloped yield curve. As I like to say, positively sloped yield curves make banking geniuses out of idiots. They make wonderful, that accretion of interest that accrues to you from that positive slope overcomes a lot of bad debt decisions.
So just for our viewers, evening viewers, you're buying money at virtually zero right now.
Yes.
And you're loaning it at whatever, 2%, 3%, 6, 7, 8%.
A lovely
so even
thing.
a banker can figure out how to make money that way.
Absolutely. It overcomes a lot of bad loans, and this is going to continue. The Fed has no intention of tightening monetary policy, and as people get concerned about inflation, which I think is ill-founded, the back end of the yield curve is going higher and higher in yield. The slope is getting more and more powerfully positive. This is going to work to the benefit of the banks. Throw into that the probabilities that mark-to-market in some fashion, whether it's completely overthrown or modified in some manner, is going to inure to the bank's benefits. Throw on top of that savings rates are going skyrocketing higher, as the baby boomers are fearful of what's happened to their 401ks and are throwing money at a rapid pace in demand deposits, which benefits the banks. All these things are working to the benefit of the banking system, and you need the banks to do well before you can have a sustained rally. I think there's more than just a bear market rally here.
All right, Jim LeCamp, come back to you. I've got 3 possible trades. One is stay with the banks. Yeah, they're up 40% in the last 3 days, but they got a long way to go before they get respectable in terms of their share price. 2, the reflation trade, and 3, the tech trade. Now, Jimmy, you got to help me and go fast because we don't have a lot of time. I got banks, I got reflation, that's commodities, gold, energy, and industrials, and then I got the tech rally. What do you like here, if anything?
I'll put them in order. If I had to buy something now, it's the commodities, particularly gold and silver, and they've actually rallied over the last couple of days, too. That's a positive sign for that space. Techs, I kind of like because of their balance sheet. On the other hand, you have a lot of valuation issues. If you're going to argue that the market's real cheap, those stocks aren't as cheap as the rest of the market. So those are secondly. And thirdly, the banks have had too big of a pop. Remember that all these brokerage firms came out and recommended Fannie Mae and Freddie Mac right before they were nationalized, one day after another. So now we're seeing the same thing. I'm a little skeptical here that things are getting that better. They're not talking about the toxic assets, and they're getting more toxic every day.
All right, but you may get some mark-to-market relief. On a cash basis, their net interest margins, as Dennis described, are going up, up, and away. Cash to cash is a great story. Why can't we have a 5-year amortization on a mark-to-market basis of the toxic assets? That's what Jerry said. Look, that's the way out of this mess. You got people now, Mary Shapiro of the SEC, Ben Bernanke said this, maybe the time's going to come.
I think that the mark-to-market is a positive. What they're talking about doing with mark-to-market is a positive. I like Warren Buffett's idea of having a 2-tiered accounting system.
Right.
The problem is that addresses liquidity. It doesn't address solvency. You've got a lot of insolvency on these loans out there, and that won't fix that.
All right, we could debate that. Jerry Bowyer, I want to ask you at the end of this thing.
Yes.
This story, Ben Bernanke going on 60 Minutes this Sunday. Now, everybody has money in their wallets. The people, the ordinary Main Street folks, Jerry, it seems to me, have a right to hear this guy, and they never do. But what do you think of this? Some people say going on 60 Minutes will create market havoc. What's your take?
He works for us. Yes, he's independent. No, he's not quarantined. The new investor majority is waking up finally. That's what a Dow 6,500 does. We're interested, so Bernanke should speak. And by the way, I think the political winds are moving in the right direction, too. Well, I think we understand what bad policies are doing to us as a country, and we're ready to make political change.
Dennis Gartman, you like Bernanke going on 60 Minutes? And shouldn't Fed chairman talk to the people directly more often?
Oh, Larry, of course. I think it's a very good idea. As long as he doesn't make it too complicated, but I think he's going to do a great job. This is a very, I mean, he's now very polished in front of the public. I think it's a great idea.
He might even say something interesting. Dennis, what are you buying tomorrow morning?
I've been buying the same things I've been buying for a while, the things that if I drop them on my foot hurt. I want to own copper, railroads, steel, banks.
All right. Dennis Gartman, Jerry Bowyer, Jim LeCamp, thank you very much, gentlemen. Thank you, Fed Chief Bernanke, for talking to the public on Sunday. I can't wait. I might even hang out and watch that. Coming up, will mark-to-market reform save bank capital? Distress assets, we got to deal with that. Why should the government do it? Let's just have some forbearance. We have a prominent congressman standing by with a report. You're watching the Kudlow Report.